Okay, so let's jump into a little bit of this sort of weekend review. Main thing, obviously, DXY getting absolutely obliterated off NFP to sort of come into the close of the week. So we had the FOMC, obviously, sort of through the week. We had markets, some markets, so we had the Fed sort of hold rates, which markets were expecting. But then sort of like those NFP numbers coming out on Friday really just sort of sealed the fate of it all. So I mean, you also had sort of the last month's figures were revised down to 297,000. Expectation was a drop off anyway of 178,000 and came in at 150. So, you know what I mean? The idea is basically, look, the Fed have sort of held rates and that you've got obviously quite a steep decline in sort of job creation over the month. That's not conducive of like, hey, let's push up the rates because pushing up the rates is going to make it harder for more people to employ because they're not being able to actually sort of expand and push their businesses so much. And so in those instances, you're not going to sort of go, oh, let's take on more employees. So that's that sort of extra sort of extrapolated out sort of view of why the market reacted the way that it did off those sort of poor numbers. But from a sort of technical standpoint, you can see it just got absolutely smashed, which, can't say that is a real shock. I mean, if you've been watching any of my videos, you know that I've been playing the downside of these moves with DXY, particularly these last kind of drive up periods through this area here, through this area here. Each one of these, so a bit more cause a crossover here. I made that video that said I didn't believe this top squeeze here. I obviously came back up here and tried to sort of get everybody, snap them all out before it just hasn't sort of looked back since. But the point being is that sort of I've been playing to the downside. So it's not a full shock that these things have played out the way that they have, but certainly the size of that drop off is sort of confirming DXY as at least a medium term top for now, because this is the lower band that we were trying to sort of get underneath. That's a good solid close, and this is on the 4 hours. I'll flip over to the daily in a second, but you can see even this sort of falling support, which provided little launch pads for it each time, even that didn't hold. So we did come across to this horizontal that we've been looking at and marked out, of course. So we pop onto the daily. We can see that this is certainly an area that we'd sort of basically isolated out, and we sort of going, okay, look, this is a good area. We've seen it being that resistance. We've seen it play its part as support. So as it's coming down, this is where we expect it to hit. And, bang, it's pretty much stopped right on here. Though I would say with the fact that you've got the Fed sort of holding the rates, I'd say you've also got the idea that I don't think this move to the downside is done. There's no reason now to be buying US dollars. Like, money wants to flow where the rates are moving up. And yes, you've got the whole sort of Middle East situation, but that hasn't really kicked off like, not like a typical war that people would be saying, okay, let's go safe haven, buy the US dollar. The US dollar has already had this massive run up for 3 months, excuse me, prior. So, there's a lot of people already sitting in profit. This is why we saw gold appreciate so much because gold had been bashed down because of, gold and DXY have that sort of great inverse relationship. And it's been sort of, gold's been hammered down. You're going for a safe haven. Are you going to buy something that's already run up for 3 months with all these people sitting in profit, or are you going to buy something which is on the lower end of its swing cycle? Obviously, you're going for the latter. You're going for gold, and that's why gold's hammered. And through this whole period, DXY has really just gone sideways. Like it hasn't done anything. So we isolated out and sort of defined these sort of little zones that we wanted to sort of get above if we were going to see a continuation, obviously below if we wanted to see a bit of a cooling off. You can see where my sort of short-term price target is, and we're moving towards this now, this sort of 104, 104.40 area. This is a sort of area, if we sort of drag it up, I mean, even if it does come back to this area, this is still only the 38% retracement of this big move up. One thing with DXY, it loves deep pullbacks, and deep pullbacks doesn't mean it's definitely changed. I mean, if we sort of actually drag this out, this could be quite interesting. So this is that large sort of channel that it was sort of respecting quite a well before it blew out the top of it. What if this decides to come back down here? And we're starting to see a little bit of a confluence of things here. This could be a top, it never really, like you could have, say, this little sort of back test area here. but never really gave it a good back test. What if it comes back down here? And this lines up perfectly, as you can see now, with the 61% fib retracement of this move here. This also comes in line, like obviously depending how fast it comes, could come down over here, so it could overshoot a little bit. But as I said, 78, 61, these are the kind of level sort of pullbacks that DXY tends to do. Like even as it's sort of moving forward, like we're coming down here, there's a deep pullback and then continuation, bang. It didn't, like it was moving down through this period. This pullback here didn't really seem to affect it too much, and then obviously bang, sold off coming through as well. So anyway, that's obviously a secondary target, but that could potentially be something where it sort of comes further down. Like obviously it's not going to go in one thing, it'll do these sort of motions, like maybe even up, boom, blah, 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 like, all the way along down, but come down here to this sort of 68 to 70, that'll give us sort of a bit of a retest of the top side of this channel. It also gives it that 61 to 78% retracement, and then we see a bit of a launch off from there. I mean, that's definitely a possibility. Like, because at the moment, as I said, you haven't got any reason to be buying US dollar. Like, safe haven wise, Middle East just hasn't really kicked off the way that I think everybody expected it to. Israel's sort of going in a little bit more cautiously, slower, but it hasn't had the effect on the markets that you would have typically seen, like we did sort of with Ukraine or similar, these sort of things. So anyway, that's obviously sort of getting a little bit ahead of ourselves. If we get back down shorter time frames, the here and now, we can see that it's actually left this gap up the top up here. So we saw the runaway gap on gold. There's a runaway gap on DXY as of now. Potentially down the track, these two could both fill. Like, once everything sort of gets back to sort of somewhat of normal relationships and inverse relationships, that's just something to keep in mind because, as I said, most gaps do like to close. But yeah, certainly sort of got hammered down off NFP into the end of the week. I'd expect a bit more of a continuation to the downside here. You might see some little sort of jerking back and forth because obviously we've come into this zone here, which is a daily sort of area. So you may see a little bit of a push up, but I would still say that we've got more downside to come with DXY than to say, hold on, this is a fake out and it's going to come back up here. I just don't think that this is really in a position on a technical level or fundamental level for people to be buying it. So I think people are going to be sort of booking their profits, and we're going to see that flow on with the rest of the sort of its crosses, all these kind of things. So flip across to the Aussie, which is the one that we've been trading very hard. So here we go. This is the chart that I've been marking off. So we're moving up towards that first price target here. So if you've been watching anything that I've been doing for the last couple of weeks or so, I've been very vocal about this sort of wedge that I've been sort of trading with Aussie. So obviously I'm a bit more of a short-term trader. I'm in and I'm out. Though it is crushing a couple of times to sort of get up and then bang, bang down a couple of times. And certainly when you're trading against such a heavy move to the downside here, it can be quite daunting to sort of think that, okay, are you picking the bottom on this sort of thing? But, I've been trading this negative divergence from the daily. We've got the big break here. We had the back test down here. Obviously, this little horizontal provided a little bit of a sort of a little knockback point for it to test the top side of this big falling wedge, or the falling resistance, sorry, top side of that wedge, and it's just exploded out. And obviously, DXY, it's finally getting itself together on a fundamental level because the RBA have just been so pathetic for months now. We've had CPI increase 2 months, month on month, yearly or whatever it is, but it's been increasing. The housing markets are going crazy. Retail sales came in 3 times above expectation. And they're still somewhat coming out with some sort of like dovish sort of rhetoric and talk, and it's just like, it just bewilders me sort of how poorly the RBA have handled it, particularly when you sort of see how obviously DXY is coming off a little bit now, but how strong the US economy has been to date with the recovery. They seem to be the only people that seem to come out with any sort of positive data. But nevertheless, Aussie's got the break now. We're sort of running away, moving up towards this first price target. So as I said, look, there's going to be a lot of sort of stops around these zones. The fact that sort of, it closed up near the top here, it closed up in these sort of wick areas. It hasn't managed to have a close up here since, well, I guess technically this large candle here back at the start of August. I mean, obviously this was a strong rejection and we saw the move afterwards with this, but technically that's where the daily close was last at this level. And it's charging through here. So I'd expect the same with DXY having a little bit more of a sort of downside to come. I expect Aussie to have a bit more upside to come. Got the RBA on Tuesday. I think it's pushed up to about a 70% expectation, which is what's fueled a lot of these moves. And this is what I'm saying with the Aussie. Aussie can have good data and still not produce good results and with its appreciate in price if the US is also coming out with some good data and positive stuff for the US dollar. Like, we just take a back seat with it all. But on the flip side of that is we can have a double pronged thing, and this is what we're seeing at the moment, and this is the main reason that we're one of the number one currencies that are appreciating against this of the majors. Is because, we've got on the home front, RBA is starting to do something. They're looking to push it up. That coupled with the fact that you're getting the US dollar selling off, you've got two segments of the market. People want to sell their US dollars and people want to buy that Aussie. So we've got that two-pronged approach of pushing us up higher. So again, little couple of positions and all this kind of stuff sort of as the weeks sort of kick off. But, I would be looking to add some positions on the pullback down here. I mean, above 65 is a great sort of level, but again, you've got people that, like myself as well, have been trading up through this area. There's some profit on the table here. People will be looking to book it. They'll be looking to sort of snap longs out. So be looking for a little bit of a pullback before sort of punching through to this sort of price target up here. I mean, who knows what will happen on sort of Monday, but I would expect if I can get some more positions down sort of sub 65, I'll be looking to sort of add to them. So if we jump down on the lower sort of time frames here, yeah, we can sort of get a bit of a better view of the sort of move here. So, I mean, this is a nice little consolidation area here, obviously, and this is the point. This is the thing that I'm saying here. So you've seen this nice big move up here, and then 55 back down to 40. That's 3/4 of a percent drop off. And then obviously bang, reloads and pushes up and that. So, FOMO may get a couple of people here, but if you get them in here and then you pull it back here and they're too easy on their positions, well, you can stop them out. But you can see this area here is also a nice little sort of 4-hour support zone as well. So yeah, if I can get sort of sub 65, I would like to sort of add a couple more. And of course, then, you're just looking, if you do get these pullbacks, then you can define these levels and you can say, look, this is the high, this is the wick, this is the weekly flip, this is the daily flip, all these kind of things to go, okay, there's the confirmation of that next leg up. But yeah, I think sort of definitely up until the high 65s, we should see some more movement. I imagine this is going to be quite hard because if we zoom out a little bit more, going back onto the daily, we can see, and this is why we've marked it out so much, that this has been quite a strong area through here. This sort of high thing, up to 66 kind of thing. It was the, I've got it marked out, I think, better on the other one. Yeah, so this is the sort of idea that you're going to sort of see this move up here, pull back, boom, boom, boom. But you can see this is the bottom of the swing point of this double top. So, this is going to be quite a strong area because this is where the market's going to be sort of flipping from highs to lows with it all. So up until the 66, I believe, we're going to see a little bit more movement. And then sort of, I'd imagine maybe a little bit of a sort of a US dollar rally and, push us back down and we might sort of just float around the 65s for a little while. Who knows? I mean, honestly, you could probably go through to the top side of 66 if everything continues the way that it's going. So, I mean, that's certainly, pie in the sky, as I said, price targets back up here around that sort of 68 level. There's a lot of stops around these areas here. So, yeah, there's a lot of people, if they're not booking, they're going to be booking their profits now if they've been short, if they're not sort of already out of it. But, yeah, I'll certainly sort of be thinking a bit more upside on the Aussie, but I'll be looking for some pullbacks early to sort of add to positions. We flip across to gold. Gold, it's ticking along still. If you watch my video on Friday and that, I said, look, I was still looking for sort of to buy the dips to sort of get up over that 2000 level, which is obviously what we got. And sort of I closed off the bulk of mine, if not all of them actually. I think I might have a small runner left around the 2001, 2002 level, but didn't manage to hold. So that's a bit interesting. So I don't know if that's necessarily, a risk off sort of thing that's sort of happening with it. Sorry, risk on, and that's obviously then sort of, the gold's not sort of the sort of one of choice at the moment. So I guess you have to have a look at sort of like equity, because I think equity markets did quite well as well. So, if gold's still playing, so gold's a funny one because it can be risk on and it can be risk off. And obviously we're seeing, a little bit of a sort of push with risk on coming into the end of the week. We saw the equity markets pushing. We're seeing Aussie, which is a good barometer for risk, pushing. We saw US dollar, obviously, you just showed was selling off. So if gold is still identifying, it's like one of those fluid things. If it's still identifying as a risk off sort of asset at the moment, then it's probably the reason that it wasn't able to hold these sort of gains up over this 2000 level. And that's all I'm saying. We're getting, it's not so much, I still say it's consolidating opposed to a complete sort of rollover. As I've obviously marked out, this little zone just here seems to be respected time and time again. If we get a break underneath this, then that for me is going to be signaling that we've got a little bit of this lower high. Actually, you can mark this one out. I think this one pretty much seems to be respected here. So we can say, you can see that's 1, 2, 3 lower highs. They're only like, a dollar or so lower than each of them each time, but that is what's happening. We are getting lower highs on these drive ups. So, we need to sort of change that pattern if we want to see more sort of top side in the short term with gold. I still think there's a possibility that we get a couple of sweep outs in here. So, you know what I mean? If I can get down between sort of 60 and 70, I'm going to be adding to my gold positions, or my gold outlook, basically. Obviously, down to 50s, I'd say kind of say that this is negated now. This was kind of basically off this idea that we had a wedge coming, and the wedge obviously rallied back up over here. So we're still holding this zone down here. So downside under 77, I think it's still got the ability to continue bouncing. If it gets down underneath 77, obviously we got some early indicators here. So if we take out this first rising support here, then obviously, we're looking back down into these higher time frame, the grey ones, so around the 80s. So I imagine sort of you'll get a bit of a push up off these levels. So you can always look for some short-term trades from the 80s back up to sort of, then we've got our defined levels of the 90s, to sort of say, okay, yep, boom, and we're going to continue this higher range through this zone here. But the 90s seem to be the swing point. So 80s to 2000s, I think, is a fair range that we can continue to see moving forward before we get a big break of either of them. So, above 2006, we've got the next leg higher. Below 1980, with a solid close, 4 hour at least. I would say we're probably going to see a bit more of a sort of cooling off, and you can drag these ones across from these previous levels and sort of look around where we might be sort of trying to get long. But I think certainly I don't think we're going to be seeing any sort of breakdowns to sort of like, low 1900s or, even 1800s or anything like that. I think sort of it's definitely going to stay in this top half of the 1900s. It's just a matter of whether we get the sweep out positions before sort of going higher, because really it's still just, it is sideways. I mean, it's really tightened up. You had that sort of 3 weeks where it just went boom, 200 buck move to the top side. But of course, 2000s obviously that really sort of strong sort of sticking point for it all. Have a look on the daily. I think actually probably see the daily better on the other chart. So yeah, I mean, again, you can see it's sideways. This is not a great sort of top wick here, but still managed to close the day bullish. So that's not sort of like one of those high heel top reversals. I would still say, and this you can see it quite well defined here as well. Like I said on the other chart, underneath the 70s, then you'd be looking down to the 50s, the 60s, where we've got these wicks down over here. So I'd imagine sort of look, if you can get a close down underneath 77, I'd be looking for 50s to 60s to have another shot to be sort of going up a bit stronger. So around this sort of level here, if we can get a breakdown underneath the 70s. So it'd be something like this, bang here, and then I reckon we'd be going up. But certainly you can see on this one as well, if we drag it out, and call this is our level, put it up here. There we go, continuation, confirmation for gold up there. But I think that's a pretty sort of clean looking break. We never got the real back test. I mean, you got this little back test here, which actually came in perfectly on this one. But yeah, I still think at the short term, we're looking at something along, this upper range here. If we break the 70s, then I think down into the sort of 50s, 60s before another sort of reload and another shoot up here. So you could be looking at a larger high range here, but with this midway point of sort of, the sort of 75 to 70, 75 to 80 kind of zone. So yeah, so still very much looking with longs on the long bias with gold. Flip across quickly. We saw, with DXY selling off. It's a broad sort of thing with all US crosses, USD crosses, and if you've been sort of watching anything, you know that I've been trying to trade the downside with this, obviously due to the sort of the risk implications as well across the market and the other sort of instruments, but. This is the great, I've dubbed it the Great China Grind, because it has just been grinding sideways, just like, as I said, for a long time we thought we had the sort of head and shoulders coming. Then that obviously proved not to be the case, flared up again. We gave it a second chance with a wider sort of shoulder. Also appeared not to really be the case. It's too long to be a right shoulder for a head and shoulders. Realistically, it's just come into this range, like we've got it marked out here, the consolidation box, and we're still looking for a breakdown underneath this level down here. We know that the buyers are sitting here, but again, the more times you tap these things, the weaker it gets. I mean, this is in a range. Obviously, it came up here, hit it by like a cent, and it's just sort of been coming down since. So if we get a breakdown under this level here, that's the one sort of major supports sort of getting broken there. We can see the RSI didn't quite manage on this second push up here to be able to sort of match it with the sort of price coming up, and we're seeing a little bit of that sort of negative divergence sort of play out. And you can see there it was almost back up to the level there, but the buying pressure to take it back up to almost this previous high was just coming in weaker. These are always a little bit lagging, so you've got to take a little bit of a sort of a jump with these ones with a little bit of a risk, because it could as well. At this stage here, it was crossing over, so it could theoretically have sort of gone bang back up to the top over here. So it is lagging a bit, but obviously afterwards you can definitely tell that, look, that we were playing the negative divergence there, and that paid out. Sorry. So again, I would expect possibly a little bit of a push up come Monday morning. We could see gaps as well, you know what I mean? There could be little gaps and then pushes up and then back down. But yeah, we're coming down into these major zones here. And this is what I say, this is the cross chart confluence. It's, when you see one thing break, it's not generally not always going to be, or most of the time, it's not going to be just that one asset that's breaking. You're going to see it happen across a flow of them. They've got to be sort of somewhat related charts, of course. But this is why we trade this combination of charts and instruments, because they all have the flow-on effect. So when you see one thing breaking, you're going to see all the other ones breaking, which adds to the whole confirmation that is the sort of way that the market's moving. It's not just sort of like one bit of data which is affecting one instrument or one asset that you're looking at. You want to see it happening across 3 or 4 different instruments, and that's a cross-chart confluence, and that's what's sort of showing that the market is actually making its decision, and it is heading, like it is selling or buying in one direction across a number of different classes. So yeah, still looking for downside on China. This is a good one to see. That's a nice high volume day, obviously closing down the bottom on the lows. I would expect still more downside to come with this one. And copper's fighting to get back up into this top range here. So, I think we can say that sort of, when we are done with this lower range, just for now. I mean, it's not a full commitment, because actually if you get down onto this, it had a pretty heavy sell-off. which was quite interesting because you didn't, and this is what I mean, you didn't see like typically sort of at least Aussie and copper are very similar, the charts. And when you see copper get smashed, typically you'll see Aussie get smashed. But you know, you had a divergence with those two because this is copper coming back up to the previous highs, and it just got hammered down here. I didn't see, or I can't recall any sort of bit of news or data or anything that supported this move coming in at 8 o'clock local time. But obviously it got hammered, but bang, push back up. So it is really trying hard to sort of get this level here. It hasn't quite got that continuation of the breaking the highs of that first pop. But you know, it again, it's been grinding for weeks. Like, you know, slowly trending, yes, but certainly not like it had been. I mean, look at the gradients of these moves here. This is when it was flying around. More or less here, it's just been the slow car crash moves. And now it's obviously moving up to the top side here a little bit. But again, you want to see higher highs to show continuation. I do believe we've got a little bit more upside on here, obviously as I've got this marked out. With these sort of levels, though, it'd be more this kind of thing. Because you know, timing can change with these things as to how fast it gets to. But you know, bang. This price target area is what I believe. You know, you've got the previous highs over here, so we've got these marked out. You've got the underside of the large triangle that it was trading for a long time. I think this will offer a little bit of resistance once it does get up, and then obviously, you know, if we continue this one up here, this will break it through here. So, you know, you've got your little chart. But I think more or less with copper, it's worth just trading the horizontals for now. Obviously, you've got these nice little channels that it's forming, but I think these will just be giving way, and I think mainly the horizontals is where I'll sort of be looking to sort of you know, get long, short, these kind of things, take profits. That's what I'm sort of relating it off. All right, sweet. And yep, that's about it from me.